Good morning, everyone. It's nice to see you. I imagine I've worked with several of you over the past several years as MTI's SBIR, STTR consultant. I'm honored to moderate this panel, which has been designed to help you identify possible opportunities for funding your business growth. Before we begin, could I please have a show of hands to indicate how many of you own or are starting your own business? Good, okay. How many of you have been in business more than 3 years? Excellent, great traction, that's good to see. I think all of you will find this forum very informative because, as many of you know, a business goes through many peaks and valleys on its journey from startup to established business. Most of you have heard about the Valley of Death, which is essentially that period between initial capital contribution and generating a revenue. This period can be identified by the lack of financing necessary to take the company to the next level. Our distinguished panel of speakers will spend the next hour providing you with information on how you can find the dollars necessary to nourish your business from startup, proof of concept, prototype, and finally, commercialization. Starting an energy-related business in this economy can be daunting, but believe it or not, many new businesses start during times that are very, very lean. According to an article in Renewables Biz, preliminary results are showing that clean tech investments return to levels not seen in 3 years. In fact, according to the Clean Tech Group, 2012 may be the best year ever. Global clean tech investments were a shade under $9 billion last year for clean technology, venture, and corporate investments, which is a 13% increase over 2010. Clean tech mergers and acquisitions reached record highs in 2011 with 391 deals and a dollar volume of $41.2 billion. That was a robust 153% growth over 2010. And while 2011 was a difficult year for clean tech and venture capital, according to this article, the historical data is indicating, again, that 2012 will be an all-time record for global clean tech investments. Very encouraging news. But first you may be asking yourself, that sounds great, but how do you get there from here? Perhaps by remembering 2 key points. In 1597, Sir Francis Bacon stated, "Knowledge is power." And attending this forum may be giving you the knowledge you need to grow your business. Whether you need this information now or later, chances are you'll find this forum very enlightening. Our speakers will talk about the 3 states of available money in Maine: the state of lending, the state of capital, and the state of grant making. This forum is really all about OPM, other people's money. I'm really a big fan of OPM, and this distinguished panel of speakers will give you an idea of how you can access other people's money. Each speaker will talk for about 10 minutes, and at 9 a.m. approximately, we'll enter into a 20-minute Q&A session. So please hold your questions until that time so that we can ensure that each speaker has the time to devote to their subject. Our first speaker is Stephen Lovejoy. Stephen is a business counselor with the Small Business Development Center, and he will focus on the planning process for accessing loans and other financing opportunities. Stephen?
Thank you very much. Good morning.
Our first speaker is Stephen Lovejoy. Stephen is a business counselor with the Small Business Development Center, and he will focus on the planning process for accessing loans and other financing opportunities.
I'd urge everyone to start before you need money. When you're working on your idea, talk to a couple of banks. And I always tell you, go to your first, where you're banking now. That's your first stop. You want to talk to them and find out what they're thinking about lending and everything, and find out what they look for, because then you can take and document and try and tie into what they're really looking for. The business plan, not everyone realizes, some people think of it as a hurdle so that you can take and get financing, but it's more than that. That is part of it, certainly. And as such, it is a marketing piece for your financing. But it's also an operational plan. It's a plan to keep you on task as you go through. It's not always the best idea to take and sit down and sketch out a plan that is close enough. We always urge people to really take the time to think about what you're doing. You know, all of the pieces that go into a business plan. The plan's where you flesh out the ideas, where you really develop all of the issues that you've got to face, where you really target who you're going to market to. I see business plans, everyone needs this product. I don't think so. So it's really a case of trying to get ahead of it, doing the research. You know, who is your target market? Where are you going to sell this? How are you going to reach them? Those are all part of the process. And certainly there are a lot of outlines. You've all seen them, and they vary a little bit from place to place, but they're still basically the same thing. Lay this out in a way that makes sense to anyone who's going to look at it and talk about giving you some money, whether it's a loan or a grant. Banks and other lenders, CEI, and I speak fondly because I used to be a lender for them, what are they looking for? They're looking to control their risk. That's why you need a plan. You've got to convince them that you've addressed all of the issues that involve risk for the bank. You may want to control your risk too. So how are you going to set up your business? You're going to need to take and look at what you can do and can't. If you want to go in and get a business loan, it's through the SBA, you don't want to personally guarantee it, well, you've got a roadblock right there. They're not going to go there. You own a house, they're going to want a second mortgage on it. They want you to have skin in the game. That said, there are ways to protect yourself from some risk, but not all. Do you want to go in and sign away all of your assets as collateral to get a loan that you haven't thought through well how you're going to make it pay back? I certainly wouldn't want to. So you look at the bank's view. They want to limit the risk. That means what? They want to make sure that you've got the 4 C's of credit, and some people will tell you there's 6 or 7 or 8. But basically, what's it come down to? It comes down to what's your character? You know, do you pay your bills? Have you got a good reputation? It comes down to collateral. What have you got for collateral? You know, if you expect the bank to advance all this money so that you can draw a $60,000 a year salary and not have anything in the game as far as your funds, that's probably not going to fly. Okay? If you've got the capacity, and capacity means not just the financial capacity to repay, but also means if you've got the skills you need. If you don't have those skills, what's the best thing you can do? Find other people to complement your skills. Now, put together a team of advisors. It can be informal, but think about how do you strengthen the holes that you've got. None of us can do all of it. You know, if you think you can do anything and everything, okay, but the chances are you can probably find somebody else to help you that's going to take and be able to strengthen what you do. It can be an informal board of advisors, if you will, but draw on other people's strengths. When you get into the capacity, if you've never run a business before, and I know many of you have your businesses and have been in business, but if you've never run a business before, you may know how to make widgets, but do you know how to manage? Do you know how to budget? So you really have to look at all of these things as you go along. A couple of things that I wanted to touch on, obviously. I work with businesses that do both products and services. To me, they're both products, just one's tangible and one is not. But one of the things that I find, when I have someone come in, and I had a fellow recently who came in, and it was technology related, and he had an idea, had done a lot of research, could talk a great game about it, but he had a real hard time expressing it in writing so that anyone would feel comfortable with what's going on. So you really need to work on those skills. One of the phrases that always scares me is when somebody says, well, it's going to be just like so-and-so. Because as you folks know, innovation is where you build value. It's not being just like someone else. It's not being the same as them but cheaper. If you want to use the Walmart model, the same as someone else but cheaper, that's a tough way to build any value in your company. Another piece that I really focus in on is the target market. Who are you going to market to and how? Is it for everybody? Probably not. If it's technology related, could it have broad implications? Absolutely. But it doesn't mean that everyone's your target market, especially as you start out, because unless you've got an awful lot of money to do a very broad marketing campaign, you've got to pick your shots. Figure out where you can sell first and build a reputation. So target marketing is an important piece, I think. Marketing campaign, how are you going to market? How are you going to reach those people? If it's a broad use, who are you going to target first, and how are you going to get to them? Is it direct mail? Is it social media? Is it advertising in the newspaper, Down East Magazine, Wooden Boat Magazine? What are you going to do there? As far as financing, one of the things that is important is put in sources and uses. Where's the money coming from? What are you going to use it for? Financial information as far as cash flow. I started, I said $250,000 to get it started. What does that imply? There's going to be more needed later. So you've got to address that, right? You've got to figure out where you're going to be and look at it in the long term, because the bank wants to know. And if you've got investors, they want to know, especially if it's venture capital, they want to know what? What's the exit strategy here? How do we get out?
1 minute, please.
Thank you. The other piece to that really is the lending process, and I just wanted to go over it quickly. Depending on where you go, you may do everything through a bank. You may do it through a bank and the city of Portland, for example, or another city, or through CEI as a gap funder. All those things are out there for you. You need to plan and you need to work. One of the best things you can do is find out all the possible resources out there. Can you get a lot of financing on certain projects? Absolutely. But the trick is you've got to plan and look for those resources that can help you strengthen your business plan, so when you give it to CEI or TD Bank, that you're going to be able to take and have some confidence that they're going to look at it and believe in it. Thank you.
Our next speaker is Mike Finnegan. Mike is a senior loan and investment officer with Coastal Enterprises, Inc., and Mike's going to be talking about financing beyond conventional bank lending. Mike?
Thank you, Karen, and it's great to be here this morning. Steve, if you got that $250,000 deal, we can talk it over at lunch. First of all, congratulations for holding the E2 Tech seminar. As we look at Maine's economy, the expansion thereof, we have to look at it with a sector development approach. And quite frankly, it's forums like these where we can have a frank and honest dialogue about capital formation. Business development are really, right on the menu. So again, congratulations to the sponsors, all the players involved this morning. I'm going to talk a little bit about coastal enterprises, a little bit of background, but quickly move to what our focus is in terms of sector development, and obviously address any questions you might have. Steve did a great opening. In fact, as we talked this morning, we thought about the logical sequence, and we moved the order around a little bit because it does start with that counseling factor. CEI has a long history with its association with the SBDC. We look forward to clients coming in, having taken their business plan, having it developed by an SBDC counselor, because 9 times out of 10, when you take that step as an entrepreneur, you've got some advantage coming into the door, whether it's a bank, whether it's an alternative financier like ourselves, the Finance Authority of Maine, any other provider of funding is going to be able to sense that you've had that secondary review, which certainly is helpful in the approval process. CEI was established in 1977. We are what they call a community development financial institution. In the world of acronyms, that's a CDFI. As a community development financial institution, think of us for a moment as a not-for-profit bank. We're not a conventional bank, but we operate with a nonprofit mission centered around what we call a triple bottom line finance motto. And this is really represented by 3 E's, the first of which is economy. And as we look at transactions to finance, we ask ourselves, does this particular transaction contribute to the local economy by generating good jobs, creating value-added product, or helping sustain a vital industry, whether it's a new or emerging industry sector? We also have a second E called equity, in that a lot of our mission ties to transactions where there's an opportunity to create opportunity for people to access information, affordable housing, financial resources, ownership, or employment in the businesses that they might develop. The third E is one that's really a lot on our minds this morning, and that is ecology, the environment. What about the nature of this transaction? What is it going to do in terms of its green dividend or return to the environment that's out there? What is it going to do in terms of reduction in the hydrocarbon footprint? What is it going to do to reduce Maine's dependency on fossil fuels? Right now, the 2 sectors that we're doing a lot of work in are sustainable agriculture, which we think holds great promise for the state of Maine, but the other big one is renewable energy. Looking at how we can get over this hump of sending $6 billion a year out in gasoline expenditures and home heating oil expenditures to outside forces when we've got the ability to generate power within the state. So how do we do this? If I can describe the continuum at CEI a little bit, it might be helpful. CEI as a nonprofit starts with a strong policy focus, where we do R&D, particularly around a sector, an economic development sector that's either existing or a future sector that holds great promise for development. As George Mitchell once said, if you do your R&D right, your policy should become self-evident. When your policy gets formed, which could be around renewable energy, sustainable agriculture, the healthcare sector, you name it, you then have to ask yourself, how do you bring the right amount of capital formation into play to drive those transactions which are going to create the outcomes that you desire in your policy creation process? And when we talk about capital formation, this is that reservoir of money, of funding, whether it's grants, whether it's conventional bank financing, whether it's the types of things that we do, subordinated debt, microenterprise lending, equity, new markets tax credits, a number of different products that all come together to create that transaction that goes out to you, the entrepreneur, who at the end of the day will create the jobs and build that sector out over time. So if you think about the process at CEI, it's a bit more involved than the process that you might see in a conventional bank environment. That's not to say that the conventional bank partners aren't real valuable in this process. We couldn't exist if we didn't have the presence of conventional bank finance in the Maine landscape. And oftentimes we find ourselves leveraging, being the gap financier that comes in with other partners, Finance Authority of Maine, EMDC, other community development agencies around the state of Maine, that come and provide that middle resource of money that enables the transaction to happen and to move forward. When we talk about the business plan, as Steve pointed out, you're going to want to have a plan that you can articulate, that you can talk about. You want to have a plan that has sense and sensibility. I often say to the lenders that I work with, we have to underwrite the psychology of the entrepreneur. So when you walk through the door with that plan, when you sit down with us and start to talk up your deal, we're going to want to know, number one, do you really own this plan? If we turn to page 55 and we look at the projections on a 5-year run, can you talk about that third year and what happens to your working capital position in an intelligent way? The more you know about how money is going to move through your business, the more you know how you quantify your projections, that's going to come across and enable you in the approval process. So again, a little bit more about the products. Microenterprise lending, these are loans up to $50,000 that often are very handy in the early startup phase, even the pre-commercialization phase, the pre-development phase, where I got an idea, I want to move ahead with it, and I've got a concept, and number one, I'm going to go get some, I'm going to do my plan, I'm going to test run it with the counselors, and then I'm going to bring it to maybe CEI, which is a higher risk financier. There are other microenterprise lenders in the state, but we have a special interest, particularly if the deal is in that sector that we're all excited about. Again, the green sector, the E2 tech sector. The next stage of funding that we do a lot of is what we call subordinated debt funding, where a bank might look to us to provide 25 to maybe as much as a third of the total deal in a subordinated debt second mortgage type of position underneath them to credit enhance the transaction. The bank's perspective, this looks somewhat like equity to them. They'll get excited, and in fact, it will enable the transaction. Oftentimes in a state with small business entrepreneurs who are just starting out, it's not realistic to do a large-scale venture capital or equity raise, although that could be a possibility down the road. What we try to do with our products is play somewhat of a quasi-equity role, even though it is debt. We're going to hear this morning about the equity components, so I won't deal a lot with that, but we do have a venture capital subsidiary that does pretty much focus on later stage companies, and we like to work with companies to get them through the startup phase, to get to a point where they can move on and maybe ponder a large-scale equity raise to drive their business model forward. Steve Weems is here in the audience this morning. Steve was the grandfather of the New Markets Tax Credit Program at Coastal Enterprises, which we can talk about later on this afternoon in the breakout session if people want to discuss that. In the end, I can't stress, as I look out across the Maine economic landscape, ladies and gentlemen, we're a small business state. We have been for a very long time. And that's not to say that we shouldn't go after those businesses, those manufacturing businesses, and those opportunities that can create large-scale jobs. But I would also offer that that's not the only game in town. I see a landscape of economic development in Maine which is going to be characterized by development of businesses that are here in this room, that grow and expand. The renewable energy business, the work that Revision Energy is doing around rooftop installations of solar panels to basically reduce utility costs in multifamily apartment buildings and businesses is groundbreaking. We've got a solar resource that we've just begun to tap in the state of Maine. As we look to other alternative energy resources, anaerobic digesters, all of these things are going to come and develop, but they aren't going to develop unless you have the courage of the entrepreneurs, the businesses in this office to take that idea And what I would offer to you this morning is take that first step. If you've got a business concept that you believe in, and it's an E2 tech, green sector type of business, we want to talk to you as soon as possible around your ideas for advancing and moving your business forward. The counseling component makes sense. We'll work with you to hopefully help birth this business, get it to a point where it might be more eligible for conventional bank finance, or work with a bank initially to get the business moving out of the gate right away. We're all in this together for development of this sector. Again, we really congratulate the E2 Tech folks for pulling this group together. I think this is going to be the beginning of a lot of discussion. I think from a public policy perspective, which we deal with all the time, we've got to look at our state government level. We've got to look at strategic focus and make sure that they're doing whatever role they can in terms of putting together the right form of capital formation to make the transaction work. So thank you for your interest this morning, and I look forward to a continuing dialogue and questions as we move through the program. Thank you.
Thank you, Mike. That was very informative. Next, we're going to turn our attention to the state of capital and our third speaker, Don Gooding. Don is the vice chair of the Maine Angels and is also the executive director of the Maine Center for Entrepreneurial Development. Don will be discussing equity funding such as that could be found from Maine Angels and venture capitalists. Don?
Good morning, everyone. I'd like to take it up to about 50,000 feet. I like to use the metaphor that capital markets, the money markets, are kind of like a giant bazaar. I don't know whether you've been to, farmers markets where there are aisles of specialty vendors. And here in the United States, because we are the biggest capitalist marketplace in the world, there are lots and lots of specialty aisles of different kinds of places to get money. And so as you're going through that marketplace, the aisle that I'm going to talk about is the high-risk, high-return part of the overall money marketplace. This is the place where people take maybe 5% of the money that they have, and they don't go to Las Vegas, but they say, I'm going to make some bets, some intelligent bets, on the chance that's going to yield some high returns. Now, venture capital gets a lot of publicity, but in the overall scheme of things, it's a relatively small number of companies that end up getting this specialty kind of money. So how is it different from debt? In this marketplace, which has really been evolving rapidly over the last 50 years, we come in and we're buying stock in your company, but we're not just buying regular common stock, which you may have issued to yourself, but rather there's this thing called preferred shares, which have evolved over the last 40 years, and it's a big pile of documents and a lot of lawyer money in order to make that happen. And we can talk about more of the details of preferred shares in the breakout session. And you end up having partners in your business. So that's different from a bank in that you're going to have other people who are essentially sitting alongside with you at the table. And depending on how much money you've raised, they may be sitting on your board of directors, which banks generally do not do. And importantly, the way this part of the money market has evolved over time, these shares, they pay a return to the investors by eventually being sold. Either the company goes public, which these days doesn't happen very often, or more frequently, the company is sold to a much larger company, and hopefully at a higher price for that stock, and that's the way the original investors earn the return on their money. So, if you don't want to have partners helping you with your business, or you don't eventually want to sell your company, then this aisle of the big capital marketplace, the money marketplace, is not for you. What has evolved over the last 50 years, just a brief history, going back before World War II, people who were called venture capitalists were wealthy individuals. After World War II, this part of the money marketplace started to become professionalized. The very first venture capital professional firm emerged after World War II. And in 1978, the United States pension laws were changed to allow the organizations that manage large pension funds and endowments to take little bits, 5% of their money perhaps, and put it in these risky kinds of investments in order to potentially earn high rewards. And so since that time, there's been a huge increase in the number of professional venture capital firms, and their job is to make a high rate of return, 20-25% per year, for other people. So they are, in fact, using other people's money. And since that time, the individuals who are using their own money to invest in private companies, they have appropriated the name angel from the Broadway world. It used to be, well, it still is actually, that the early investors in Broadway shows were called angels. And so now individuals who invest their own money in these high-risk, high-return potential companies are called angel investors. The other thing that's happened over the last 2 decades is the formation of angel investor groups. So bands of individuals coming together. At the Maine Angels, we have about 35 today. Other groups get as large as 80 individuals. They come together. They form a single place for you, the entrepreneur, to come send your business plan. They collaborate on investigating a potential investment. And then most of the time, they're making individual decisions. So angel investors are using their own money. Venture capitalists are investing other people's money. And in order to make those high returns of 20 to 25% over a portfolio of investments, any individual investment has to have the potential to return a lot, 75 to 100% per year, because the failure rate of these high-risk investments is quite high. In order to reach 20 to 25%, when you've got maybe at least 50% that lose all of the money, you have to have a very high return. So that means that in this aisle of the money marketplace, is that right for you? You have to have the potential to have a very high return, which usually means you're going to be a leader in an important growing marketplace. Let's see. So that's sort of a high-level look at what angel investors and venture capitalists are all about. Let me just give you a quick overview of some of the organizations here in Maine. So in Maine Angels, as I said, we have about 35 members today. We've invested about $1 million in the last year in 6 companies, 5 new investments, 1 follow-on investment. And that's a small fraction of the number of companies that have come to talk to us. And that is quite typical in this aisle of the overall money marketplace. It's a very small percentage of companies that actually get this kind of investment. Also here in Maine, we have 2 smaller venture capital firms, Small Enterprise Growth Fund, which takes money from our taxpayers and invests in promising companies here in Maine. And then CEI just raised a venture capital fund. And both of these are, in the scale of venture capital, very modest-sized funds, which means that they are investing generally under $1 million per investment. That's also true with Maine Angels. We're averaging $100,000 to $250,000 per investment, and we are typically co-investing with others. It's one of the interesting things about our aisle of the money marketplace is that we collaborate with other organizations when we are investing in companies. Sometimes we will take a lead role where we say we really like this company and we encourage our compatriots out there to co-invest. Other times we follow the lead of other angel investment groups or venture capital firms. And in fact, we are co-investing alongside Small Enterprise Growth Fund, and I imagine we will be doing that with CEI in the future. An important comment on the resources here in Maine for the clean tech sector. Clean tech can be extremely capital intensive. I've got a friend in the audience who's looking at a $2 million or so money raised now. Ultimately, to scale up, he's going to need $20 million. The companies that are here in Maine generally don't have that amount of funding, and so it is challenging for us to participate in these larger investments. The reason is that over the last 50 years, it's happened very frequently that smaller investors who don't have tens of millions of dollars, when things kind of go bad, you know, in year 3, 4, 5 of the investment, suddenly somebody comes in with a big pot of money and says, sorry, you early investors are going to lose a lot of value in your company. So that's one of the many risks that early stage investors have to look at. And so if your company is ultimately going to need tens of millions of dollars, it's probably going to be necessary at some point along the way to talk to sources of private equity that are outside of the state. And there's nothing wrong with that. We've got one of the biggest sources of money just 2 hours from here. And there are people in the Boston area who are willing to invest in Maine companies. But again, it's a very select number of companies. Let me just quickly comment on the overall state of clean tech. Clean tech capital. Karen mentioned some big numbers, but behind those big numbers is a lot of money invested in some later stage investments. So literally hundreds of millions of dollars going into something that's scaling up a particular kind of manufacturing. And in that regard, the large venture capital funds have kind of taken the place of the speculative IPO market that used to be around before Sarbanes-Oxley and gave capital to companies that were at that stage of development. Venture capital funds have kind of taken that place. So there's a lot of money going there. However, in early stage clean tech, the data is for the last 2 years, it's only been 50 companies per year across the entire United States. So it's extremely challenging, I would say, to get a clean tech early stage venture capital investment. It's not impossible, but if you're trying to ultimately build a very large company, it's still extremely challenging times. However, it's not impossible, and there continues to be money flowing in from those pension funds and college endowments and such into the clean tech sector. So a firm called Flagship down in the Boston area that just raised a $270 million venture capital fund focused on early stage clean tech. That's a great thing. And there continues to be money available for the later stages. So I would say overall, there's a lot of funding available, but in this specialty aisle of the overall money marketplace, it's going to be a relatively small number of companies in Maine that are going to be appropriate in this marketplace. And I'd love to talk more about that in the breakout section. Thank you very much.
Great. Thank you, Don. Our speakers so far this morning have been talking about funding businesses that could be farther down the business growth pipeline. Our next speaker, Betsy Beeman, is the president of the Maine Technology Institute, and Betsy's going to be discussing the various grant and loan programs offered by MTI to support both startups and existing entrepreneurs that are seeking to bring technology innovations to market. Betsy?
Thank you, Karen. Good morning, everybody. Delighted to be here, part of this great panel. So we've heard already about loans and then equity investments, and these are typically the more sort of traditional ways, although sometimes I agree completely, rare ways, but still traditional ways to finance company growth. But there are some niche areas where grants can be very helpful. And I was asked to talk about what are those sources of grants for the clean tech sector, what kind of grant funding is available here in Maine, and how you can find out more information about this kind of grant funding. So in Maine, for clean tech, one of the primary areas that grant funding is available is for research and development activity. A couple of people have referenced the Valley of Death, that period between where there is research going on or a concept and actually having a company generating more revenues than expenses. And grants are often an option in the early stages of this Valley of Death. I should also note that there is another important session that's not on the panel, which is called bootstrapping, and it's probably the most common sort of financing strategy for a company. But maybe that's a session at another meeting. Anyway, so as Karen mentioned, this early stage of the Valley of Death can be for a startup company that has no revenues at all and is bringing its first product or a suite of products forward to the market. It also can be in a similar way for an existing company that might have current products or services out in the market, but is looking to develop a new line of business and has a period of time when they're investing more in the development of that new product than is obviously being brought in by the company in that product area. And for Maine companies, two primary sources of grant funding for this R&D phase is either funding from the Maine Technology Institute or the federal SBIR and STTR funding. And I'll quickly talk about those, and we'll get into more detail in the breakout sessions. For those of you who aren't, I'd love to have a show of hands of folks who are currently working for or have worked for a company that's gotten funding from MTI, just so we have a sense. So if you have an opportunity at the breakout sessions or before or after, feel free, if you don't know much about MTI, to ask any of those folks what their experience with MTI has been and what role MTI funding has helped their company move forward. So MTI provides grants, conditional loans, and a limited amount of equity investment to technology companies across the 7 targeted technology sectors that have been identified by the state of Maine. A number of these are sectors that include or can include clean tech. It's not only environmental technology, but aquaculture and marine science. There are folks looking at algae as a source of biofuels. In the advanced sector for forestry and agriculture, of course, there are folks looking at wood products and agricultural waste as inputs for biofuels. Composite materials, over the last several years, there's been a great deal of activity looking at the use of advanced materials for renewable energy technologies, precision manufacturing, similarly, information technology, smart systems that help buildings or factories be more energy efficient. So there's a lot of sort of clean tech is almost a sector that cuts across all of our other sectors. And Kathy Renaud wrote an interesting paper a couple of years ago, just sort of identifying a number of strengths that we have here in Maine in the clean tech sector. And it's probably time for her to brush that off and update it, because there's been so much activity over the last couple of years. In our business innovation program at MTI, there are 2 sorts of grants that we primarily provide. One is a fairly new grant that we launched in the fall called the Tech Start Grant, and that's for up to $5,000 that can be used for sort of the non-R&D work that needs to be done before you do the R&D. It might be business planning, which we've talked about the importance of here. It might be market research. You may be convinced that there's a strong market for this, but often the investors you're going to be wanting to persuade down the road need a lot more data that in fact is true. We have deadlines for applications monthly, so short application can come in quickly. You find out quickly whether you got funded. You can resubmit quickly if for some reason your proposal was turned back for a lack of information or other issues. So Tech Start grants are a great way if you're just starting out to do that kind of important groundwork before you're really starting to spend more money on R&D. That next step is what's called a seed grant, which has recently been expanded to $25,000 for that early stage research and development activity. And again, this kind of work that might be building a prototype and testing it, working with engineers or scientists to look at how a product that's worked at the bench level can work out in the field. What it's really doing is reducing the risk and increasing reducing the risk and reducing the cost for these follow-on investors, either venture capital or angel investors, as well as the banks. So it's putting your company or your venture into a much more attractive position for securing traditional investment down the road. These are competitive grants. We typically, sort of on average, will fund maybe 1 out of 3 or 4, but it's not as competitive as the funding that Don was talking about from venture capitalists. We do require matching funding from the company, so you've got skin in the game, and we know this is an important initiative for you as an entrepreneur, as a company. So those are some of the grants. They lead you to development loans and possible equity investment from MTI or from others. Because I was asked to talk about grants, I won't go into as much detail here, but I can answer questions, or we can talk more at the breakout session. But in terms of getting more information about our funding, we have a pretty comprehensive information on the website. We have periodic workshops and webinars. Please just call us. We've got a great team that can help sit down with you. In fact, we encourage you to come in and talk with us rather than just sort of blindly sending in an application. We do find that folks who engage with us have a higher probability of getting funded than those who don't. In addition to these funds, which is a Maine-specific program, you've heard a couple mentions of this very large federal program called the Small Business Innovation Research and Small Business Technology Transfer Program. Karen will be talking in a lot more depth about this in the breakout session, but it basically is over $2 billion a year funding program across 11 federal agencies that provides grant funding for small businesses, and most of Maine's businesses fit in the small business category. For grants of up to $100,000 for feasibility activity and up to $1 million for research and development activity. And these are grants, they're not loans, so you don't have to pay it back. It's extraordinarily powerful money for folks who can navigate the system and who are working on a technology that the federal government is interested in funding. MTI helps companies learn about and apply competitively for this grant funding. We can do it by providing you with a Tech Start grant to help you put together a proposal that's strong and competitive. We can do it by providing some pro bono consulting to help you figure out which is the right federal agency that has an interest in yours. That's more complicated than it looks, because you would think that the Department of Agriculture only funds R&D related to agriculture, but they also fund R&D related to renewable energy and rural development. So it's not just looking at the name of the federal agency and deciding, yep, that's the one for me. It takes a lot more homework. We can also provide a small matching fund to a company that secures R&D funding, because when the feds fund R&D, they don't allow you to use any of that money to build your business. They only allow you to use that money to develop the technology. And you can't build a strong and growing company by just doing the R&D. There are other things you need to do as well. How to find out more about the SBIR sort of universe, you can contact Karen West, you can contact Shane Beckham at MTI, or you can go to www.sbir.gov and get more information there. I have another minute? I don't know.
You may.
Sure. Okay. On the topic of grants also, folks might think, well, what about the role of private philanthropy? I mean, they're the typical, when you think of grants, you usually think of private foundations. And there is a robust community of private foundations in Maine. So you might wonder whether they're a source that you should look at. Private foundations typically don't make grants to private companies. They can, it's more complicated for them. They have to meet all sorts of IRS rules. So typically they're funding nonprofit activity. But there can be valuable and even revenue generating activity in the nonprofit sector in clean tech. So I thought it was worth a mention. It's also possible, but not common, for private foundations, which typically have endowments like pension funds and other institutions, to make investments from their endowment funds in what they call through mission-related investment. So just for folks who are interested, in 2009, Maine's top 20 grant makers made over 300 grants, totaling almost $6 million in projects that had an environmental focus, which represented 11% of the grants made by these foundations. So not a huge amount of their grant making, but certainly a respectable portion. The 5 foundations that had made the largest contribution in environmental projects was the Elmina B. Sewell Foundation, the Maine Community Foundation, the Harold Alfond Foundation, the Betterment Fund, and the Davis Conservation Foundation. The Maine Philanthropy Center, which is actually just next door in the building that the library is in, I forget the name of it right now, they have periodic tutorials where you can go in and they'll teach you how to do research on the interests of Maine foundations. So for those of you who might be involved in clean tech activity that either is in the nonprofit but revenue generating area, or are in a business area that has really strong social and environmental impact, and so a foundation might be wanting to fund something that's sort of related to what you do, they're a terrific resource that's worth approaching. I guess the one last thing is just that most of the programs I've talked about and grant opportunities are not only focused on clean tech, they're focused across a number of areas as well. But there is a web-based database that outlines specific state incentives around renewable energy and energy efficiency, where you can find a variety of sort of related programs and incentives, and it's called www.dsireusa.org, and I can write that down for anyone who wants it, or say it again. It looks like somebody wants me to say it again, dsireusa.org. And that has a number of programs that are not some loan programs, some grant programs, and other incentive programs that you folks might be interested in.
Great. Thank you, Betsy. Now we're going to go ahead. Are we going to do Q&A first or wrap up? Okay, great. Let's open it up. We have about 20 minutes for questions and answers to our panelists. I think to start it off, I have one for all of you, and maybe we can just do real quick sound bites. The clean tech sector is extremely high risk and can be sometimes out there in terms of solar, wind, and moving the technology forward. Since you all talked about risk, could you each give us 1 or 2 words about how, from your point of view, a small business can mitigate risk? In other words, to make them more approachable for you, for your funding opportunities. Mike?
Real quickly, when we see a renewable energy transaction come in, what I do is typically team up with Steve Cole, who's our in-house policy renewable energy specialist, and we look at the transaction right out of the gate from a risk perspective, understanding that if we're in a pre-development stage, we are going to look at the personal commitment of the entrepreneur around that. In Maine, you can expect that you're most likely in a very early stage high-risk loan going to have to offer a personal guarantee. That's part of the litmus test and certainly a needed factor to enable yourself to move forward. One of the challenges in the renewable energy sector is that there was a lot of interesting money lying around 2 years ago that you could access for the development of your sector, of projects in that sector. That has begun to shrunk a bit. So we're now back into the stage where if you're in that early high-risk mode, there's going to strike a balance between your personal commitment in the deal and the high-risk nature of that early-stage investment. So we'll be making a first, pretty rapid assessment of where we might be here. It could be a collateralized guarantee. It'd be, some degree of willingness to step forward and play that primary first modest step in terms of an equity place, within the transaction.
Great. Stephen, what would you do from an SBDC point of view?
I think one of the first things that I always do when I see someone in this kind of a situation is look for what are they putting in, but also who's the right person for them to be talking to. Part of what I do is try and keep track of all of the different lenders out there and what they're interested in doing and what they're not. So there are certain lenders that may be very receptive. There are others that may not. But the other piece is, can we take and limit the lender's risk by having several different entities involved? Rather than saying, gee, we need this much money and no one will give it to us. What about if we divide it up among 3, 4, or in one case 5 different entities so that no one had a lot at risk? We're able to put it together for the company.
Great. Betsy, Don, whoever?
Well, I guess I sort of alluded to this when I made my comments that MTI funding can be really used to reduce risk and reduce cost, and so certainly coming to MTI and sort of co-investing with us in a project that demonstrates the superior value of your technology over what else is on the market is really a way that many companies use our funding. If you can show potential investors that you're better than the direct competition or the indirect competition, you've taken a really big step towards being able to grow your company and generate revenues.
Good. Don?
Great teams are the best mitigator of risk in our section of the world, because typically in the high-risk, high-reward area, you never get it quite right the first time. And so you have to have good management teams that are flexible in the way they think and very agile. Either they've done it before, which we like to see, or if they haven't, they are A, coachable, and B, are adding to advisory boards and boards of directors, the kind of people that will assist them in making these rapid-fire decisions. There's a phrase out in Silicon Valley called the pivot, which is quite common. It means you're going this way, you're in the market, you didn't get it quite right, and suddenly you have to go that way. Lots of companies have been successful after the pivot, but not all management teams are capable of doing it. So that's the number one thing that we look for.
Mike has one quick comment before we open it up to the floor.
Real quickly, just to illustrate an example of how we might approach the risk thing following on Steve's comment. There's a program called the SBA 504 Debenture Program. We're a certified agent to deliver that. And essentially, it's a fancy word for a second mortgage position in a transaction. In the renewable energy world, a lot of these projects are capital intensive. If you had an equipment loan, for instance, you could get a 10-year debenture for typically 35 to 40% of the transaction. The bank would do either 45 or 50%, and you would be asked to do 10 or 15% in terms of equity infusion, which could take the form of an MTI grant to leverage those other sources to come in. That being said, you got to have a good plan and show the ability to amortize the debt associated with that above-average leverage structure.
Great. Thank you. Questions from the floor? We have Harry walking around with a microphone for anyone who'd like to ask the panel any questions. Over there in the corner.
I just have a comment about mitigating risk. Certainly you can transfer your risk via insurance, and you can also mitigate risk via insurance. And I think a good comprehensive insurance program makes one more attractive to investors as well, especially if they're on the board and you have D&O insurance and those items and professional liability, whatever suits your particular situation.
Great, thank you. Other questions? Let's go with you, sir. Give me 1 second for Harry to come around, and we'll get your question asked. Could you stand up, please? I am standing. Oh, even better, even better.
A giant among men.
That's fine. No, don't bother. Oh, jeez.
Thank you.
Sorry.
My name is James Monroe. The company is Blue Water Dynamos. Anybody knows me, if I pay to come to an event, I'm not a wallflower. Serious business, and what we're talking about is very serious business for the people in this room, for the state of Maine, maybe the country, and maybe the world. I would thank first Mr. Gooding for telling us if you're an equipment manufacturer, forget about it. I had one other comment, then I have a question.
That's not true, by the way. I'm an investor in Ocean Renewable Power Company, and they're making stuff.
Thank you. Sometimes you get a reaction by asking a pointed question. The comment, having been involved in other things for many years, I would strongly encourage you to encourage all the people in this sector to stay very involved with those who make the rules that govern your business. I've spent some time, I'm sure some others have too, up there in Augusta trying to protect, I'll call it my turf, ours being ocean and river energy type products. But if you're not there when they're making the rules, you can be ruled out of business. On the other side, if you put your act together and have credible statements, it's amazing how you can influence legislature and rules.
It's true.
In our case, ocean energy business, there are even international standards being established. I have some friends who participate in that level, but I behoove people pay attention to the people and the entities that are making rules for your business.
Great.
And to just give an example, not to brag or anything, but it came up last night. People may recall when the workers' comp was all revised in the state of Maine. At that time, I went to the major public hearing when that primary bill was being debated. And unfortunately, I was the only business person who got up and spoke at that meeting. And the background on that, my company was paying $50 $100 on some of our employees. I got up, and you can speak in several tones as a gentleman or lady, or you can be a fire breather.
Right.
That day I cranked it up, and I used words like money mongers. It was hot. But it had to be, because I was the only one there.
And I think you bring up a very good point there in that it is extremely important to keep your ear as to what's happening in Augusta, and not only in Augusta, but also federal regulations as well. Do you have a quick question?
Yeah, I do.
Because
I really
we only
do.
have a couple of minutes
No, I'm
left.
sorry.
That's
I
okay.
thought the points were important. My question is, what about the involvement in foreign companies? We're very closely allied with a British company that's ready to do anything, anywhere. And I'm curious if anybody has any, like the MTI grants, if their money's any good for grants, or any of these other entities that are up there, what
Great
their opinion
question.
is on foreign money. Thank you.
Right.
Thank you. You can hand the microphone over to the next gentleman. That's it?
That was a great advertisement for becoming a member of the E2 Tech Council, because one of the things that your trade association can do is keep an eye on what's going on in Augusta while folks are busy making payroll and building their companies. It's actually been quite interesting in the last couple of years. I think everybody knows that there's been less investment than because of the rather, the challenging economic period we've been in. We've seen a couple of examples in Maine of companies that were purchased by foreign or international companies And typically, I think that's been seen as a bad thing, and the assumption has been that, oh, the company's going to close it down and move their operations elsewhere. And we've seen a couple of examples, probably most recently and excitingly, the Malnica Healthcare actually purchasing a Maine company, i.e. Rhinell, based in Wiscasset, and seeing that company as a jumping off point for not only expanding Rhinell, but building a new state-of-the-art manufacturing facility at Brunswick Landing, which is, they've broken ground and will be completed in early 2013, and will create, I think, about 100 high-quality manufacturing jobs. So I think we've seen recently there have been some exciting examples of companies that have been purchased by companies that are owned outside of the United States that have then been investing in the company, but because they've had that main company has invested in R&D and has a very high quality suite of products and services on the market, so they're a great investment and they want to expand. In terms of whether a foreign, I didn't understand if part of your question was whether a foreign company can apply to MTI for funding. Was that also part of it or no?
The question was specifically, is their money any good as a match for MTI funding?
Sure. Absolutely.
It's still green.
Right.
Real
Right.
quick, Mike?
One program that you ought to be aware of, and it may or may not have application in the E2 tech sector, it's a little early to tell, is something called the EB-5 program, which essentially is a program that was set up to enable foreign investment in companies both in rural and urban areas in the state of Maine and or the United States. What happens is somebody can apply for an EB-5 designation in a geographic region. Once that designation is made, a foreign company who has an interest in getting favored green card status or ultimate citizenship can make a minimal investment in a rural area of $500,000. Now, these investments have to have some sort of degree of economic impact and job creation. Jay Peak over in Vermont actually used this program to build a hospitality facility on their mountain, and it had good employment impact. But if you've got a company that can show some degree of job creation and impact, the EB-5 could be a vehicle, an investment vehicle to channel foreign money in. The benefit to the foreign investor, again, is priority green card status, for principals of the company, et cetera, et cetera. It's a complicated program, but one that if you've got any interest in trying to attract foreign investors, you ought to take a look at.
Great. Thank you. There was a question over here.
Yeah, thank you. It seemed like most of the comments were implicitly about capitalization of individual companies. And I'm curious from each of your perspectives, lending, granting, capital investment, about the advantages or disadvantages of partnerships and collaboration. So if one or several private companies and public research institutions and a nonprofit trade association or nonprofit organizations are all working together as a partnership or collaboration, is that essential? Is it advantageous? Is it disadvantageous because it's more complicated and less accountable? So what do you have to say about capitalization of partnerships and collaborations?
Great. Who would like to take the first comment?
Well, you just described the MTI Cluster Award program really nicely. We do. I didn't mention it here because the focus of this session is on investing in individual companies, but certainly Maine needs more than individually successful companies to have a vibrant economy, and MTI does have an ability to make grants to support industry-led collaborative activity to advance different parts of our innovation economy, and they often include not only a number of companies, but either a trade association, a research institution, or other key partners. So it's, but typically that's not a revenue generating activity. That's a revenue, it's a expense, so it's a cost center, not a profit center, and that's why grants are most appropriate. And really what it's trying to do is address the fact that rural states and economies of rural states are challenged by not being able to build a critical mass of companies and important affiliated organizations in the same way that a much more highly populated state or region can.
If I can just do a quick comment, a private company that is a part of a larger partnership would be attractive for a couple things. First of all, it's leveraging the resources of all the other partners, and leverage is something that all of us look for. And actually, just as a general comment, as you're looking at your financing strategy, you will probably need to do a lot of different things. And so how you put it all together is challenging, but a partnership is one very viable option. And Betsy referred to bootstrapping. Part of the bootstrapping suite is having partnerships with larger organizations to leverage their resources to help boost your own bulk as a small company.
Right. Stephen, did you have a comment? And unfortunately, it's going to have to be the last one for the Q&A section.
Yeah, just to reinforce what Don had said, the partnership, the other resources you can draw on. I mentioned earlier about having an advisory board, having other people involved. You draw on the strengths of others that you may lack, and that's where those kinds of partnerships can come into play. But of course, if you're talking about debt, you still have to show the capacity to repay.
We have one more raised hand in the very back. Can we give you like 30 seconds, and we'll try to keep it up. Oh, okay. Steve? Sorry. This is the fun part. We all like this part.
Good morning.
Morning, Steve.
A lot of discussion this morning has been on the capitalization of small businesses and fairly modest needs. I think one of the challenges that we face in Maine is raising the significant capital that we need for the growth of this industry and the state, and that's been a challenge for us. Would you care to comment on that?
Mike?
Yeah, Steve, that is an absolutely excellent point. I mean, we've all seen, chronicled the history of companies that have looked at Maine, but quite frankly, given our state budget, our economic development resources, we sometimes can't come up with the big blocks of capital. I, having worked in state government for a number of years and having utilized the state tax-exempt bond cap as an ability to use money for affordable housing, but also to raise money for the Finance Authority of Maine through industrial development revenue bonds. I think in this state we've got to start thinking about what is a larger capital formation model that will pull together resources either through bonding on a taxable basis or a tax-exempt basis that can be dedicated to bring the kind of long-term subsidy that's going to be attractive to businesses that want to come to Maine. The New Markets Tax Credit Program is a good program. We've been the beneficiaries of it, but it's got its own limitations and restrictions and guidelines. I think in Maine, and we are leaders in innovation, we need to take a second look at our ability to build those larger blocks of capital that Steve references to that can be brought to bear in a particularly attractive economic development solution, whether it's an interest rate buy-down program or taking a whole second look at the state's bonding capacity to say, how can we use this at an effectively higher level to take advantage of those good opportunities that will come down the pike. Not a lot of specific answers today, but I think Augusta, the leadership, everybody should be talking about effective use of this bonding debt authority to bring about economic development outcomes.
Okay, Mike, sorry. Betsy, you have like 10 seconds, and then we've got to stop.
think there are things that we can absolutely do at the state level, but also looking regionally. Don mentioned there's a lot of capital just to our south. MTI is part of a collaborative effort that recently got some, as is E2 Tech and the Mid-Coast Regional Redevelopment Authority. It's part of a collaboration that just got federal funding through a highly competitive initiative called the I-6 Green Program, and there'll be Clean Tech Innovations New England is this new initiative that's being launched that will help connect Maine companies with sources of expertise and capital and research and development across New England. So there'll be, I think they're important avenues to tap some of that funding through private and public funding regionally, not just with a state focus.
Great. Okay. We are slightly behind schedule. Jim, would you like to come up and do our wrap-up, please? Thank you, everyone.